So I know there are a lot of institutions and a lot of companies that are promoting financial literacy in the schools, but you're right. Like you can start at home, even with your young children, they start developing those mindsets and behaviors early on. Like,
Oh,
I mean, I guess depending on the age, but just trying to understand and not give everything that they want because now you're going to grow up and now as an adult, you want to get and buy everything that you want because
right.
it's a habit that you built since you were a child.
Yeah, I'm very leery of the Lego aisle in Target when my kids are with me, for sure. Uh,
Don't look that way.
Hi, and welcome to Your Customer, Your Success. Today, we're going to talk about your financial success and financial planning and wealth building, and a firm with a true customer focus. We have a very special guest today, Samanda Morales. Samanda is the founder and owner of WellFin 360, an independent, fee-only financial planning and investment advisory firm. Samanda has over 20 years of experience in financial services and wealth building and has a very interesting story to share with us today. We are super excited to hear all about her financial and business journey and learn about the strategies that have driven her success. Samanda, welcome to the show.
Hello, Gary. Thank you for having me. How you
Oh,
doing?
well, great. We are so excited to talk to you today. Um, Now that I've introduced you, why don't you tell us about your company a little bit and how you help people?
Sure. Thank you. So WellFin 360, as you said, is a investment management firm, financial planning that focuses on individuals that have the desire to do build wealth. I focus specifically on early career professionals and what I call first time wealth builders, as well as small business owners. And um, my services are combined financial coaching, financial planning, and financial advice. And I focus mainly on empowering my clients to build that strong financial foundation.
Brilliant. And the reason I have you here, that is the kind of customer focus I love to talk about and share with the audience. That is a true customer focus. And I think that's something that you could really add value to someone's financial life and their life as a whole. And speaking of that, I think it's a great idea to go back to the beginning because I have heard your financial story. If you could share that with us. And for the record, I've known Samanda for quite some time. We did work together in a previous work role way back when. But it is a quite interesting story that really has shaped your perspective of the world and finance and your relationship with wealth and money.
Mhm. Yeah, sure. So I'm going to try to summarize it at a high level for the audience. So first, I'm going to share a little bit more about my personal story and then my professional, which is going to provide a better idea as to why I'm doing what I'm doing. Um, so for context, I arrived to the United States from the Dominican Republic when I was 14 to live with my mother here. And like many Americans that migrate to the United States for a better life, um, I grew up with limited financial resources and challenges, not understanding the financial system, not really understanding what it means to build wealth or do financial planning. We focus a lot on working hard and ensuring that we have a nice house and have all the necessary needs for our day-to-day living. So I grew up in that environment, not really understanding what it means to do financial planning or wealth building. That's not a conversation we had around the table, which most Americans don't do.
Hmm.
So at 17, I was able to get my first job. I went to school during the day, and the part-time job helped me to pay for books, um, food, and I had a small car that I used to commute to school. And then I just focused on that, working and going to school, and not really planning ahead. So just to jump ahead a little bit, my husband, I married in 2001. My husband and I bought a house in 2003. Um, which we saved some money for the down payment, but a lot of the updates in the house we put in our credit cards. We replaced the
Hmm.
door, the windows. So it was a big purchase that went to our credit cards.
Right.
And then my mother passed away in 2003,
Hmm.
unexpectedly. She was dealing with sickness, but I didn't prepare for funeral
Hmm.
costs. So that cost had to go also in our credit card. So by 2003, 2004, we had about $60,000 in credit card debt, mortgage underwater because the housing market was, um,
Oh yeah,
right?
early
Remember that?
2000s, right?
Yes,
Flashback, everyone.
yes. PTSD. So it was underwater for about like 5 to 10 years. So we couldn't refinance it.
Wow.
We focused a lot in paying debt and got into this cycle of paycheck to paycheck. And when the finances were able, when the financial system recuperated, we were able to refinance the house and include our credit card debt in the refinancing. So we were paid off the credit
Hmm.
cards. And then that's when I was really more intentional about our finances. That I'm someone that actually learns from experiences and
Hmm.
I try to improve them. So I talked to my husband and said, what are the things that we need to do? You know, what are the savings that we need to make sure that we have so we don't um, fall into this high debt again or not have enough for unexpected expenses. So I started basically coaching my husband. I said he's my first client. So we review our finances, where are we spending our money, and then
Hmm.
we saved. We stopped buying coffee outside. We stopped eating out, and we
Yeah.
started saving money and started building the long-term financial plan. So fast forward, working also a couple of financial services companies, and one of them is where we work together. Um, I started to realize there were a lot of investment products that individuals have access to, but
Hmm.
they may not know about.
Right.
Like brokerage accounts and mutual funds, or now ETFs, or other investment products that individuals have access to, but they don't have the understanding or the financial professional to guide them through those.
Right.
So that's when 2019, I launched the company, and where I'm coaching individuals to um, manage their expenses and be intentional with where they're spending the money, but also be intentional to save and invest, not just for short term goals, like paying off credit cards or going on vacation, but as the long term goal to have a comfortable life, but also prepare for unexpected circumstances and challenges that no one wants to um, deal with. But it's not, life is not guaranteed. Like things will come up,
Right. Oh
a
yeah.
loss of a loved one, a loss of a job, or
Hmm.
sickness. And those are the things that we can prepare for in advance and not have to deal with the consequences of being unprepared.
Yeah. And I don't know. I feel like most people are woefully unprepared financially, just that they don't receive coaching or guidance. And I know you're trying to do that with with your family now. Um, I'm going to start to try to do that with my kids as well. I'm okay, right? I have a investment in financial services background, but when I got a financial planner, when I started having the family, let me tell you, I wasn't even close. All right. There
Yeah,
was so many things I was missing. I was off on not enough insurance,
yeah,
way behind on the retirement, and then forget about the college savings, right?
yeah.
So I think most people could benefit from financial planning and they don't seek it. And I'm not sure why. And I just wonder if you had any thoughts about that.
Sure. And two things. One, I think COVID um, uncovered a lot of the things that average people faced. It's not enough savings, high debt, and not being prepared. Like
Right.
most Americans during COVID were, as you probably read, had less than $500 in savings, didn't have any emergency fund for emergency purposes,
Mm.
or didn't have any kind of insurance for loss of income or you know sickness. I think most people think and believe that they need to have a lot of money to seek financial planning or
Yep.
advice.
Yep.
And if you think, or if you look around, most of the services are geared, financial planning services are geared toward individuals that already have assets built,
Right.
and they have this amount of what I call investable assets that need to be managed. However, that's why I'm doing what I'm doing. Um, I focus on individuals that don't have assets built, but
Hmm.
work hard and they want to build a financial foundation. And then that's what coaching comes into place, because there are financial behaviors and money mindset that we grew up with that we don't realize that we have them until we actually think about our spending, our savings, and the way we, when we go make a purchase, like all those mindset and behaviors come into play. So that is, I think, the feeling that people have, that they need to have a lot of money or they need to
Right.
be financially prepared to have a financial planner. But then there are small boutiques like mine where we focus on individuals that are during the asset building phase, where we work with clients to manage expenses, manage debt, build a college savings, and how do I review my 401k to ensure that I'm actually saving enough money throughout my asset building stage so that I have enough money when I'm nearing retirement?
Right. And I'm glad you said that, because I agree completely. That's one of the things people think of it as, private wealth management, where you have to have $10 million, and that's great. And there are various needs of someone who have a substantial amount of wealth. There's tax planning and estate planning, but you still need estate planning, if you have a home and kids and things like
Mhm.
that. And so I think people make that mistake. Number one, you think you have to be super affluent to seek financial planning. And two is, I think there's a little bit of, well, I can just do it myself. I
Right.
I, I can do a
A
budget,
little bit
which
of
which is
pride.
kind of me.
I work in financial services.
I,
I should know this.
I got it all right. And I was missing a bunch of things. But it is good to have someone who really knows the latest and greatest, and just even what to do with your cash, how much cash, where to put the cash, especially now where you're getting no interest on cash for a while. Now you can get interest on some cash vehicles,
Hmm. Right.
that have high yield cash vehicles and things like that. So yeah, and one of the things I always tell everybody, I was totally unprepared for the cost of daycare
Oh,
when we had
yes.
kids. It's more
Big.
than my college. Okay.
Yes.
Cost, which, okay, granted, that was a little bit of time ago, but still, it was more than a year of daycare is more than a year of college for me. And it was crazy. And I think a lot of people struggle with that, or caught
Yeah.
way off guard with that. And then you run into that decision: is one of the working parents stay home, right? So there's a lot
So
to think.
that's a great stage to actually have a planner work with you
Right.
even before you have kids. We have planning to have kids in a couple of years. How much do we need to start saving, not just to pay for um, daycare, but would it be cheaper just to one of us to stay home? So there is a there is a lot of scenarios that you can walk through with a planner or financial coach to prepare. And sometimes it's because financial planners and financial coaches, you speak, you deal with hundreds of clients. So you've seen different scenarios, you've seen what works and you see what doesn't work. So we are able to bring those perspectives and point of view to the table, and we can provide recommendations based on things that we have seen that work with people and things that we've seen that does not work.
Yeah. That's a great point. That actually leads me to my next question, which is, how do you customize and tailor the experience? Because at the beginning, I referred to, this is really how you customize experiences, um, and have a true customer focus, because everybody's a little different, right? So, can you think of maybe how do you do that? Some type of example of, like, how you would walk somebody through the process, or an interesting story from the process on how you could customize and tailor a solution for someone.
Sure. So my first conversation is meeting the person. It's either in person or Zoom now these days, and just ask the question, what brought you to call me today or to set up a meeting? And my first mission is to understand what that individual is coming from, understanding the background, what are the goals, what are the challenges, what are the future needs, and what are the concerns that that person has that is leading them to find a trusted partner to work with them. So understanding the background. I'm also really we get into the conversation maybe in the second meeting because it's hard for people to open up about their personal or their financial
Yeah.
life. So I first say I'm a fiduciary. I'm an investment register advisor. I'm a fiduciary. That means that anything that you share with me, it's confidential, and your interest comes before mine. So
Right.
I just,
That's
I always say that.
that is well, that's very important because a lot of firms are not acting as fiduciaries, right?
Yeah,
They might be selling you products and making commissions and things. So um,
exactly.
I
So
think you
I explained that I'm a fiduciary. I'm a fee only. What that means is that I don't make money on commission or by selling products. So it's mainly stricted. I get paid from the client directly.
right, and that I think is super important. So thank you for sharing that. Um, so what else? What other bits of advice can you give folks? What are people missing these days that you think? What is a common kind of oops people are not thinking of, or they're missing, they're not planning for?
Definitely not understanding that life will throw curves and things will happen unexpectedly, and then we need to prepare for them in advance, especially those that have a family or that are still have a young family. It's like having a car. Like you have a car insurance in case you
Right.
have a car accident. Like you don't want to pay out of pocket for medical expenses or for to fix your car. So the same thing with your finances. If you put a plan in place and build guardrails to help you stay within the the trajectory that you have to retire a certain age or to have a certain amount of um, funds available to have a comfortable lifestyle. That is what I see most people like, and especially the ones that are young. I'm still young. I have time to plan. It's like, no, like if you start now, it's actually better. You
Much
can,
better.
yeah, you can save less over time. That if you wait till you're 35 and your 40s, now you need to start saving more because your retirement it's coming, it's around the corner. So
Yeah, certainly the sooner the better. But I think what I'm hearing is definitely have an emergency fund.
yes,
And that is something, I've always made sure I've had. And even my wife, luckily, we get along financially. I don't know if I think you know what I mean. But
yes,
I think that's actually an interesting topic too. But she's been the same way. And when I met her, we talked about that. Like, she didn't have, a ton of money growing up, and
hmm
she's in education. She's a teacher basically. So she worked 2 jobs. She worked, at night at Crate and Barrel and put things together and had to keep a really strict budget and made sure she
hmm
had a little bit of a fund. And so luckily we see eye to eye on that. But I'm sure certainly you run into the instances where people are not, how should we put it, financially compatible. And I'm sure in a relationship, and that poses its own challenges, I'm sure.
yes. And I'm going to use my own example
Yeah.
because I know my husband is actually it's fine with this, but in my relationship with at the beginning, and I'm a saver, and I like to spend. I'm intentional where I'm spending. But he is actually was on the other side of that. He was just like, I'm going to buy whatever I see that I like, and so we had to come to terms, and hence that's why I say he's my first client. I sat him down and say, okay, this is where you're spending your money. And then he realized that he was more addicted to coffee than what we thought. So
Yeah, I've seen the coffee bills.
but actually, that money leads to relationship misunderstanding that
Oh,
could
sure.
lead to divorce and separation. So
Yeah.
um, having that conversation and understanding that having a plan does not mean you can spend anything. You just rather, okay, how are we going to plan the income that you make, the income that I make to achieve our personal goals, but also to achieve the goals as a couple and as a family.
Yeah. No, it's funny because now I'm thinking back, before we got married, we got married in a church the old-fashioned way, and we went through the pre-Cana exercises. They do talk about that. I was impressed because I don't know, I figured we would talk about the Bible or whatever for a couple days, right?
Yeah.
No,
They talked about
no,
your
seriously.
finances.
No, they did. I was saying, like, you need to be, think about this and communicate and talk because people run into issues with this stuff. And it was kind of funny because we got married a little older and we were on the same page with that stuff. So, like, yeah, we're good with this section. So,
And
no-
statistic, it has been seen, proven that couples that work together in their finances actually do better financially
oh, yeah.
than if you're not aligned.
Yeah.
So meaning that you'll have more investments and you can build a good savings and just be maintain a comfortable lifestyle.
Yeah. It's no, it is definitely a great advantage to have someone who's you're on the same page with financially. Um, so let's let's move into a little bit more of the kind of fun and interesting questions. We'll stay on the same topic. What is the best piece of financial advice you've ever received? I know you're giving some great advice, but what is one that you've received that sticks with you?
I cannot say that I received a financial advice. However, what I can say is I have been given an example of a good financial advice. And I have to give my father credit for that. I watched my father, and I don't know if you listened to my other podcast that I had with Stacey Ennis, where I share
Mhm.
the how my father was intentional with his finances. So I watched my father manage his finances very well. He didn't he didn't buy unnecessary things that he didn't need, or he was just very intentional about saving and buying the things that were necessary. So I watched that.
Mhm.
And then I also watched how um, he was able to still live a comfortable lifestyle from those kind of investments and intentional decisions that he took when he was younger. He's able to live in a comfortable life now, where he can leverage those investments that he made early on to live a comfortable life. So I watched that, and I was always like, I'm not going to overspend. I don't want to use my credit card because I know I need to pay this back next month. And
Yeah.
I was really intentional about that.
Yeah, and let me tell you, I was an economics major in college, and I've always been kind of in the banking kind of mindset. And all it took me was looking at the interest rate on a credit card. I can do the basic math there to realize something was up. Something was up with that. And you don't really want to run a balance on those things, but
No,
it's amazing what does happen, right? So
you lose
um,
money at the end.
it's crazy. So awesome. So, um, let's talk about habits. So we can keep it on financial habits. What's a great financial habit or routine that either you practice or that you've helped instill in some of your clients?
So it depends. I'm going to use one that I told a client early on, especially for those um, the people, especially the ladies that like to go to the store and we buy, we go, I need one item, then we come up with 10 different ones from the store. Um, so I said, okay, one of the things that I actually do myself and I share with those clients that had the urge to buy things that they didn't really need is ask your question, do you really need that item?
Hmm.
It's in your cart. You go into the cashier and then you're gonna revisit that decision to buy the item. Do I need it? One. Number two, if I don't buy it, will I still be okay? And if those two questions are no, then you shouldn't buy it. So it just I don't know, be intentional with what you purchase and where you purchase it and ask your question, do I really need it now? If I don't buy it right now, am I going to be okay?
Yeah,
So I
yeah.
think it's just
The logic brain has to overrule the emotional brain.
yeah,
Um,
not overspending for sure. So that it's a habit of how do I stay with how spend only the money that you have, not the one that you don't have. Credit card, or if you need to get a loan to buy something that you really want, then that's not a good decision.
Yeah. No, it certainly isn't, and I gotta be honest, I'm a little guilty of that myself at the golf store occasionally. You go to
It
just
happens to all of us.
That's right. You just need a few, balls. You don't need the Titleist Pro V1s, and, "Wait, I need a glove. Oh, those shoes look pretty good over there. Shoes kind and those wedge do I need a new wedge?" And
Or
it
just need it now, or should I wait till they go on
Right.
sale?
So we've all been there, but that is certainly, sound advice.
Yeah,
Um,
another one, sorry that
Go ahead.
Gary, that I wanted to share is to be intentional with savings. It
Oh, yeah.
doesn't matter how much money you save. It doesn't have to be a lot of money. $20 a week consistently will add up to a balance that you never thought you could have. So consistency in savings, it doesn't matter if it's a small amount, and also being intentional with your spending, ensuring that you're spending on things that you truly need, especially during times where the economy is not doing great.
Mhm. The other thing is I don't think we educate certainly enough on financial planning, especially with kids in school, but even the fundamentals of investing. I think that's missing. And unless you specifically go to school and college and kind of take that investment track,
Yeah.
people don't understand basic financial and investment concepts.
Right.
And I think that's a big impediment. I'm not sure what the answer is. I'm not sure if you have any thoughts on that. But somewhere along the line, I think that's something to one consider, um, whether it be in higher not elementary, excuse me, high school introductions to these concepts, or certainly college and higher education. It really is something I think people are missing.
Yep.
And it's up, I feel like it's up to me, which isn't a bad thing necessarily, to help start teaching my kids. The older one is at that age, and he's lights out with math. Start teaching them the fundamentals of this stuff.
Absolutely. So I think two things actually. I saw on LinkedIn someone posted a um, a survey that was conducted by the National Council of Financial Services. I'll share the source with you. But the amount of time that schools spend on financial literacy compared to the subject is very minimal. And it doesn't have to be a lot of time. It's just how do we incorporate financial literacy within the curriculum? It could be math, or it could be just throughout the day, making um, empowering the kids to think about decisions that they make, and think about that opportunity cost of those decisions that they're making. So I know there are a lot of institutions and a lot of companies that are promoting financial literacy in the schools. But you're right. Like, you can start at home, even with your young children. They start developing those mindsets and behaviors early on. Like,
Oh yeah.
when you take your child to the store and they say, "I want that toy, I want that toy," and then you can say, "Well, I gave you a toy last week." No, 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 I really want it. So do we just buy it to make them happy, or do we step back and say, "Okay, listen, we spent a lot of money buying a toy last week. You don't really need this toy," and just have a conversation. I mean, I guess depending on the age, but just trying to understand and not give everything that they want, because now you're going to grow up, and now as an adult you want to get and buy everything that you want, because
Right.
it's a habit that you built since you were a child.
Yeah, I'm very leery of the Lego aisle in Target when my kids are with me, for sure. Uh,
Don't look that way.
and yeah, it is something, but they're learning, so it is fun too. So
Yeah.
it's definitely something to think about. Let's go with one last question. I'm trying to think of a good one for you. So hang on. Okay, so one thing I did wanted to ask before we go is what is there a difference between financial coaching and financial planning or advice? Because I hear them all the time, and I'm not sure there's a difference, but I think there is.
Yes, there is a difference. So, as a financial coach, the focus is more on behavioral change, educating the client on financial education, different types of how many savings accounts and what's the difference between a savings account and a money market account, and just providing that also the empowerment that the client can make those behavioral and mindset changes. It's also, we provide tools to do the knowledge building and also empower them to make informed financial decisions on a day-to-day basis, and help them understand their situation today and how to make better decisions to improve their situation tomorrow. So it's more hands-on, one-on-one teaching and coaching. So financial advice is focused more on providing recommendations for investments, like how much do you need to have when you retire. This is how much you need to contribute to your retirement account. Um, these are the different financial products that are available to you, annuities or insurance, life insurance, tax planning, and different aspects of future planning toward retirement.
Hmm.
It also, as a financial advisor, you can create an action plan that has an outcome as far as investments and reduce tax liability. So it's more oriented toward retirement planning,
Right.
and the financial coach is more changing mindset, money scripts, and behavior, um, and the way you make financial decisions. I hope that
Yeah, no, it's very
helped.
interesting. Yeah, so it's a little bit more tactical versus long-term strategic.
Right.
Yeah.
Yes.
Well, that's interesting.
Yes.
I never knew that. So thank you for sharing that with us.
So it's
So,
the way I explain it to my client is like if you go take a class in economics and you learn all about um, investment management and savings and long-term planning and how the economy works. But then you go home and then you sit at your table and say, okay, how does this apply to me and my day-to-day and my personal situation? And how do I go about investing and understanding why the economy matters to me? Why should I be thinking about inflation? And why should I be thinking about why does interest rate matter to me? How does that apply to my personal situation?
Samanda, we're running out of time. Thank you so much for joining us today. Where can people find you if they want to reach out?
Visit my website, wellfin360.com, and you can schedule a meeting with me or a call. Thank you for having me, Gary.
Oh, thank you so much for being here. So I think this was great. Again, I wanted to focus on financial success and true customer focus. And I think you've articulated that need and that positioning and that service that you provide beautifully. And I think it'll be very helpful for many people. So thank you so much for being here today.
Thank you.
That's a wrap. Thank you so much for tuning in today. We hope you found something insightful that will enhance your experiences and drive your success. If you enjoyed the episode, please leave a review and share your thoughts to help us improve the show. Don't forget to head on over to marascxhub.com for more ways to connect with me and learn more about experience management. Until next time, I'm Gary Mara, working hard for your customer and your success.